All right, y'all. We are live with this is session 14 of the trading course, and we're going to be talking about psychology. If you can, let me know in the Discord. What's going on, Moondream, Monte Crypto, TK42, Dan? Shout out to all you guys. Man, it is a nice day. I've been out working all day in the yard with my computer nearby, of course. And the sun is hot out there. I'm feeling kind of sunburnt, which is a good feeling after this crazy winter. Bring on the sunburn. All right, I'm going to wait for a few more people to get in here. I don't know if we should call this trading psychology or trading psychiatry. Now, I'm not a psychiatrist, so I cannot prescribe you guys drugs. But, sometimes after a day of trading, you might feel like you need something. um, I'm half joking, by the way. I'm half joking. All right, so let me see here. This is my Ethereum trade. Okay, here we go. This is going to be more of just me talking and less of looking at the charts. Because really, and all these things I'm going to tell you in this course, in this session. Yeah, exactly, right, Monte Crypto? You need a prescription to sedate you and keep you from FOMOing. Yeah, I'm serious. Like, this stuff I'm going to tell you now, you probably already know. And the only way you're actually going to get it down is through experience. And I don't think anybody ever has it down 100%. But the purpose of trading psychology is to get... I'm sorry, psychology. Did I say psychiatry? The purpose of trading psychology is to remove all the emotions from trading, because we need to approach this very mechanically. We're looking at a chart, we're doing analysis on the chart, and then we're coming up with the most probable outcome, managing our risk so that we have a very low risk to reward ratio. And when we're doing that, we need to accept the fact that losses will happen. We need to accept the fact that trading, in a lot of ways, is very random, right? All indications might point to the fact that we're going down, and yet price might go up. Like, a perfect example of this is yesterday, and I did jump the gun on this a little bit, but yesterday I entered this short right here. The reason I entered the short was because I saw that we formed a resistance right here. We were unable to keep this resistance. We broke below. We retested the resistance, and then we started to come down. And I'm like, okay, we're at a daily level. And so I'm going to set my target at the next daily level right here. That was my analysis. I admitted to myself it was a risky trade. I, in hindsight, should have waited until I had more confirmations on higher time frames, but I entered anyway. And I got stopped out of this trade, and I did make sure it was a break-even trade. But, at the end of the day, even if you do your analysis, you're going to get stopped out. And that's just part of trading. And to make things even worse, later on when I woke up in the morning, let me see if I can pull up this chart here. But yeah, so later on in the morning, I take a look at the chart, because I turned my phone off after that and went to sleep because I was exhausted. So I shorted right here. I shorted. It was actually this candle, this 1 hour candle, as we were rejecting off that resistance. It was a purple candle, then it turned blue, and we had this flash pump, and then what do you know? We come all the way down and hit my take profits perfectly, right? So, that's gonna happen. That's just going to happen. And when we're trading, we need to just accept the fact that these things are going to happen. And a lot of times, we're going to lose a trade. We're not going to end up with the profit that we were hoping for. And that's okay. That's just part of the game. So, let me just double check the Discord, make sure everyone can hear everything. Let me come to where are we? Here we go. Questions during live stream. Yeah, everything looks good. All right, let me close this here. Cool. All right, guys, welcome to session 14, Trading Psychology, Tips for a Good Mindset. Okay, I'm just going to go through some tips. You have this. I recommend you print it out, write it down, whatever you got to do. Number one, do your TA and trust your TA. Okay, mark your levels and decide where you want to enter a trade. So every morning, when you're doing your technical analysis, or whenever you do it, let me pull up a blank chart here. Let me just lower these things. Every morning or every night, whenever you do your technical analysis, you are going to mark out your levels like this, and you are going to look for areas where you say, okay, if price gets to that area today, I will be looking for a trade. You're not going to want to just look at the chart and randomly enter a trade. You're going to want to have premeditated areas where you're looking to enter a trade. It could be a scalp trade or a swing trade, but really, as far as my style of trading goes, I don't like to just come in here, look at Market Cipher and say, oh, we're getting upward momentum, let's go ahead and long. I like to instead come in here and look at my levels and say, okay, if price does come down here, then I will be looking for a trade. Or if price comes up here, then I will be looking for a trade. Number two is look at Market Cipher and decide what you want to see before entering a trade. And that's also very important. You could decide, okay, if price does come up to this level, I will be looking for a short. But I will only be looking for a short if I see Market Cipher starting to print a top on the 4 hour. And then this in here would be your short entry. And you could write it down to the support. What you don't want to do is just wait for price to get to a certain level and then trade that level based on the way you feel, because a lot of times people will come up to this daily resistance and they will feel like they want to long it because, well, they're like, oh, it's a breakout trade. But what's happening to Market Cipher when we're up at these levels, where we're starting to curve over to the top? If we go down to the lower time frames, when we're breaking out of this resistance, you can see that clearly we're starting to come down on Market Cipher. So coming up with these things in advance are going to keep you from entering trades that you probably should not be entering into. And once you get your confirmations, enter the trade, right? Don't enter the trade before you get your confirmations. And this applies to every kind of trade, like a swing trade, a scalp trade. Make sure that you get your confirmations before entering the trade. And then number two, this goes right along with it, but have a plan beforehand. Don't enter the trade without listing the reasons as to why you're entering that trade. You should actually be able to come up with a list and say, I'm entering this trade because X, Y, and Z. Or because of A, B, and C. Or because of 1, 2, and 3. Either one of those combinations of numbers or letters will work. But what's most important here, guys, is that you know why you're entering that trade. And if somebody were to ask you, why are you long right now? You would say, oh, I'm long because of this and this and this and this. And then you need to have an entry and an exit plan. And don't deviate from those plans. If you decide that you are going to exit when you hit a certain level, exit when you hit a certain level. If you decide you're going to take partial profits at a certain level, take partial profits at a certain level. Don't just, well, we'll get into that later, but what you don't want to do is micromanage your trades. Like if you're in a swing trade and you're looking at a lower time frame and you're getting nervous that the price is not going in your direction, don't waver on your opinion and your decision. That's very important. You may be tempted to trade against your plan. Don't do that. So if I have a plan, and my plan is I am going to long here, and I'm going to stay long, right? When the price starts going against me, don't all of a sudden say, okay, I'm not going to long anymore. I'm going to short. I think the price is going down now, so I'm going to short. Don't do that, because if you keep changing your mind, you are going to end up losing a ton of money. I remember when I first started trading, I would do that often, where I would see price going up and I would long, and then I would see price going down and I would short, and as soon as I would short, price would come back up, and it was no fun. It was no fun. I had to do that a few times before I realized never to do that again. Having a plan within your plan. Okay, number 4. If you see that the trade may not go your way, you can ensure a small win or a break even at a lower target. So what I mean by that is this. If you enter a long position and it's like a scalp, right? Let's say it's a small scalp, like this move right here, okay? This would be a small scalp long because technically we're in a downtrend, we're below the moving averages, we're trading the counter trend, and then we're expecting to come down more, right? If you think that you are not going to hit your first take profit, it's okay to take profit out of that trade to ensure a break-even trade or a small win. And this will actually help you relax during the rest of the trade and not be too concerned when you see price going the opposite way. That's okay. So I call that having a plan within your plan. I might say, okay, I'm going to set my take profit here, but if I start to see like some negative momentum on market cipher, and if I see that we're forming a lower high and I'm longing and we're starting to form lower highs, or we're hitting a resistance that I didn't necessarily see, I might take profit there and then say, okay, now this will be either a break-even trade or a nice little win. And I think that's perfectly acceptable. Some people teach against that, but the way I look at it is this. If you enter a trade right here, let's say you enter a trade right in here, somewhere in here, okay, and the price is coming up, and let's say you had your first take profit was right here, okay, now you're starting to see prices coming down. You might not hit your take profit, so you have two things that could possibly happen. Either you're going to get stopped out and you're going to be in a loss, or you could take a little profit out right here to ensure that if you get stopped out, you'll be in break even, or you can eventually come up and hit your take profit. So now your two options are break even and lose or win nothing, or win something instead of, win something or win nothing. It will help you stay in the trade and not be too concerned about it. I'm a really big fan of doing this, and it will cause you to earn less money on your scalp trades for sure. Like if you're taking 50% of your position out here to ensure that if you get stopped out, you're in break even, or if you move your stop loss into profit or something like that, you're not going to make as much money trading as you could, but it minimizes the risk. And it's all about finding that balance between risk and reward. And I personally found, especially with the smaller trades, since I'm primarily like a swing trader, I love to trade the altcoins that pump. And then during sideways Bitcoin markets, I actually really enjoy sideways markets because it's so easy to trade that. You just mark your levels and trade them. And we don't have these crazy swings like we would in a bull market. But for me, I found that for smaller trades, they're going to happen in one of two ways. Either it's going to be a really small move, or it's going to be a really big move. It's going to be a scalp that turns into like a day trade. And so if you take some profit out right here, and now you still have 50% of your position in the trade, and it just so happens to come up all the way here, well, you're still making a good amount of money. But if the trade doesn't go your way, and you get stopped out, well, then now you're losing money. So what this does is it helps you avoid your losses. It helps you avoid losses. And basically you're going to have break-even trades or winning trades, which is super nice. For me, I found that it really helps. And it also helps my psychology because it's hard to be in a trade when you see the price going the opposite direction that you want. And if you can hedge against a loss, then you're like, oh, well, I can like go out about my day. I don't have to constantly watch the chart in the 1 minute time frame, like people, on the 1 second time frame, waiting for, every little move. Should I get out? Should I stay in? I don't know. You don't have to worry about that, man. On the 1 second time frame, we are we just had a massive pump on the 1 second time frame. Massive pump. Maybe I'll start scalping the 1 second. Man, look at that. Look at that. So that's just my style, and that's the way I do it. But the main point of all this, and why I'm saying all this, is because we need to remove as much emotion as possible from these trades. Because at the end of the day, we're all here because we want to make money. We want to do this to increase our wealth, to increase our cryptocurrency, perhaps to stop working a part-time job or even a full-time job, or to have more financial freedom. And when that pressure is on the line, it becomes very easy to be moved by emotion and not by just looking at the chart. And anything you can do to minimize that emotion will be very beneficial to you in the long run. All right, number 5, losses are a part of trading. You're going to have losses too. You're not always going to find yourself in a position where you can break even on a trade. Sometimes you'll enter a long and the price just goes totally down, and you might lose, and it might be a significant loss too. If it's a big trade position that you're entering and you have a lot of confluence and you're confident in your position, you might end up with a loss. It could be a significant loss, maybe even 1 to 5% of your whole account if you're following good risk management. And when that happens, you need to not get down about it, which is going to be very hard. I remember when I first started trading, a number of years ago, I was very ambitious that I was going to have success right away. And I had never taken a course on trading. I just was watching some YouTube videos, and I learned about support and resistance, and I was trying different strategies. I remember the strategy I was testing was the moving average crossover strategy. I'm like, oh, that's so easy. If the moving averages cross over, I go long. If they cross under, I go short. And I think I was on a very low time frame. And this was not crypto, by the way. And I got sliced up pretty bad. And I remember those losses. They really got me down. I know this sounds stupid to say it out loud, but I was like questioning my value as a husband and a provider for my family, because I had to go up and tell my wife, hey, I was gonna start investing and trading and making money, and I have to tell you that I lost a whole bunch of it. And that's a horrible feeling. So when losses happen, it's important that you don't let them get to you, because this is all taking for granted the fact that we have actually implemented a good strategy, that we have back tested, that we know the win rate. This is taking for granted the fact that we have a risk management system in place, right? So it's not the same as me trying to trade on the 3-minute time frame with moving averages and not knowing what I'm doing. This is completely different. But it's still easy to feel those emotions when we lose, because we put so much time and effort into our TA, and we spend so much time looking at the charts, and we get very passionate about this. And so when we lose, it can be a hit to the ego and to your self-esteem. But we need to keep the focus on the fact that we have this strategy, we know the win rate, we have good risk management, and we need to avoid these temptations, right? Do not revenge trade. When you lose, do not try to enter a trade to gain your losses back. In fact, what I recommend you do is you walk away from the charts. If you lose a trade, maybe don't even trade for the rest of that day. Do something different. Go outside, look at the beautiful nature out there, God's creation. I mean, I found after a day of looking at the computer, you kind of feel a little bit crazy, like you might need a psychiatrist. So go out there, do something fun, hang out with your family, hang out with your friends, do something totally different. Don't think about the charts. And, accept the fact that you've lost. That's part of trading. And remember, you have a plan and a strategy. Number 6 is don't micromanage your swing trades. This was a big one for me. It's so easy to come onto a chart and, whoa, how did this get here? It's so easy to come to a chart, and if you're like swing trading, right, on the 4-hour time frame, it's so easy to just look at this and be like, oh, well, it's so obvious. I'll just enter here and then I'll exit over here, right? I mean, how hard could that be? Well, when you're in the middle of this, and things are happening, and we have something like this, right? Where the Bitcoin price goes from, literally, it went from 59K down to 56K, a 5.28% dip in 2 candlesticks. And when you're in the middle of that, it's very easy to want to micromanage your trades and get out of the trade or panic sell. You know, we can't micromanage our swing trades. We need to really zoom out and look at this objectively and say, if we're above the 21 EMA, we are in an uptrend. Even if a candle dips below the 21 EMA, it's okay. As long as it doesn't confirm below that EMA, we're still technically in an uptrend. And the opposite is true for a downtrend, right? Right here. As long as we're trading below those moving averages, we're in a downtrend. And so the temptation is to try and come down to a lower time frame. And, you know, if we just look at what happened here on March 31st, March 31st, if we're looking at this on the 15-minute time frame, let's go back to March 31st here. You know, this looks pretty intense. This looks pretty intense. And this is the kind of stuff that makes people, you know, make YouTube videos saying, you know, is the bull market over? I mean, because we came up to almost an all-time high and then we dumped down almost 2 daily support levels in a matter of half an hour. And so if we're looking at our swing trades on lower time frames and we're letting emotion get to us, it will be very hard to stay in those swing positions. And I found that you can make the most money in the swing positions. So it's best to just set those and forget those and kind of let them do their thing. You know, lately for me, I've been trying to get into a swing position. I had to exit my Bitcoin swing position here because we came under the 21 EMA. I was in this awesome trade yesterday, and I had to close out of it again because we came under the 21 EMA. So now I'm actually long again, which is funny because I'm expecting lower movement in the market. If we go to Market Cipher A, we printed a blood diamond on the 8-hour, which the last time that happened was right here, and when that did happen, we had a 13% dump. So that's very rare that we get a blood diamond on the 8-hour. Okay, we had 2 of them in January, and then the next one we had was March 20th, and then we have one today. So I don't think these things are anything to play around with. So I am expecting more downward momentum. But you know, I had to exit my swing long, and I only did it because of the 21 EMA. I wasn't micromanaging it. I had a very clear confirmation and invalidation point, which is this: if we go under that 21 EMA, I am out. No questions asked, no thoughts about it. I'm just doing it. And if we don't go under that 21 EMA, then I'm staying in. That's the way you have to do it for these swing trades. You can't micromanage them. All right, this is an important one. Create personal trading rules. Okay, this will prevent you from trading when you cannot focus. And these will include TA rules as well as life rules. So the TA rules are, you know, don't enter a long unless Market Cipher is giving you your confirmations, right? Or if you're trading a specific strategy, maybe the 55 strategy or the 4-hour, 24-minute strategy, you don't enter a trade unless you get your confirmations. Those are rules that you should write down next to your trading station. You know, don't FOMO into a trade unless you have your confirmations, all these things. But more so, you should have life rules. I remember there was a point in time where I would trade everywhere. I would be glued to my phone everywhere, and I would be trying to enter trades from everywhere. I remember being in the supermarket with my wife, looking at my phone, practically running into people, trying to find trades. And I'll tell you, if you're doing that, you're probably going to miss something on your TA. You're going to miss something on a time frame. You're going to miss one of your indications. You're going to enter into some bad trades. What I recommend you do is you have some kind of routine for your technical analysis and for your trading, where instead of just randomly picking up your phone and looking at the charts, or trying to trade when you're in bed, or trying to trade when you're doing something else, or driving, God forbid, right? You have a routine where, okay, I'm going to, wake up. Like for me, like I have a very clear routine that helps me do my technical analysis and come up with the plans for how I'm going to trade, right? I wake up in the morning, I pray, I read the Bible. If it's a day that I'm going to work out, I work out. And then if not, then I will just get a cup of coffee. I'll sit in front of my computer in the morning very early, and I'll do my technical analysis for Bitcoin, for Ethereum. I will look at different altcoins, and that's where I come up with my plans for the day. So for that day moving forward, I already know what the charts are doing, what I'm looking for, what needs to happen for me to enter a trade. I might not know all the details, but I have the general overview, and that's what's most important. And I recommend you guys get some kind of trading routine down, and you don't trade unless you're following that routine. Because I promise you, if you're in Walmart and you're in the checkout line on your TradingView app, it can be very difficult to try and enter a trade that way because you can't switch from time frame to time frame easily, or you're not even focused on the charts, and you might be focused on that weird guy in line in front of you, and you're like, man, I can't believe he left the house looking like that. Those Walmart people. And I've seen a lot of Walmart people in my day because when I was in a band, we used to park the RV at Walmart every night because they let you park there overnight. And you see some weird people, man. I'm telling you, in Nebraska at like 2:30 a.m. in Walmart, you will see some weird people. And so it's not a good time to be trading. My rules are don't trade in bed. Unless I have an alert, like that's the difference. I'm not going to like open up a chart and start to do like technical analysis to see if there's a trade entry when I'm in bed. If I'm trading in bed, it's because I already did my analysis and I already know if this happens, I want to enter a trade. I've set my alerts, so I don't have to do any thinking when I get that alert. I just open the computer, say, are my confirmations met? Boom, I enter the trade. But if you just woke up and you like get your phone and you're looking at TradingView, don't just start entering into trades. And that's what I mean by having life rules for trading. It's important. It's important. And then avoid paralysis of analysis. For every reason you can think to go long, there's going to be reasons to go short. And that's just the way it is. There's only two directions the price can go. It can either go up or it can go down, or it could stay sideways, right? But it's probably going to go up or down at least a little bit, because even if we're trading sideways, we're going up and down. So it can be very easy to become paralyzed of analysis, where you might start second guessing yourself. You might come up with the perfect reason as to why you should go long, okay? And then you will be like, okay, I think I'm going to go long. But then you think more and you're like, well, I can see a whole bunch of reasons why I should go short too. And then you end up paralyzed. And then what happens is you don't do anything. Instead, what we should focus on is finding those good probability setups and sticking to our decisions. So, for example, like if we are going to go long, like right now, I'm in this long. I'm in this long because I looked at the 30-minute time frame, and I noticed that every time we've been printing a bottom on this 30-minute time frame, we test the bottom of this channel, and then we come up a little bit, okay? I also saw that we were bouncing off a daily support level. Okay, that's great. I also saw that every time Market Cipher B was printing a bottom on the half hour, I already said that, right? Yeah, every time Market Cipher B prints a bottom, we bounce off this trend line. So now we have double bounce off a trend line and a daily level. And so I said, okay, I'll enter a scalp long right here. I'll enter a scalp long, even though I do think price is going to keep going down. Because, I wanted to enter. It looked good. I looked at the 2-hour time frame, and I saw, wow, look at this direction on the 2-hour time frame. We have a very clear bottom, then we have a trigger wave, and it looks like we're about to print another trigger wave. And if we do, I think that could give us some nice momentum. Maybe we will come up and test this 21 EMA or something like that. So, that was why I entered this trade. Now, I could sit here and think, well, we just had that blood diamond on the 8-hour, And so I do think we're going to come down, and I also think I would love to test that 54K level. Man, what a dirty chart this is. And so I could end up being paralyzed, and in the meantime the price is moving without me, and I'm analyzing it too long. So if you come up with a plan, which is okay, if we hit the daily level and I see good momentum on market cipher B, and I would enter a scalp trade, then you enter that scalp trade and you don't think twice about it. Even though you still might think the market's going to come down, you're not looking to trade on a larger time frame, you're looking to trade on a smaller time frame. And also, hang on, I'm sorry. Yeah, you're not looking to trade on the larger time frame. You're looking to enter a little scalp. And so the price, by the time you're done analyzing, the price might already have made a little move, and you missed out on a little gain. And if we're using good risk management, like for example, putting the stop loss underneath this this trend line right here is so you're either gonna lose a little bit or you're gonna gain. And if you have a good entry that's very close to a support, then you're risking very little. So there's really not that much to be concerned about. So don't get paralyzed analyzing. Once you come up with your reasons to enter a trade, execute, and then stick to that plan. And personally, in this trade, I've already taken out some profits, and now I don't really care. I don't really care what happens because I've already taken profits out. And for me, I entered right here. I took profits out here. I took some more out when I got up here, and so for me, that's like a 1.5% gain because it is 3x leverage. And so, I'm good with that now. I'm good with that. I don't care what happens. It still looks pretty bullish on the 2 hour. It still looks pretty good on the half hour. But the truth is, I do think we're going to keep coming down. And so I've made my trade, and I didn't end up being paralyzed by analysis. I made my analysis. I entered the trade. It is what it is. And now it's time to move on to the next one. And it would be really cool if we come up here and hit this next take profit level, or any of these take profit levels, or even this take profit level. Or how cool would it be if we broke out to 60K? But the point is, once you make your analysis, just act on it, and don't look back. Don't look back. Your entry is good. Your risk is low, and that there's a chance you will lose. Don't look back, even if your favorite TA YouTuber is in the opposite position, right? If I go long, and then I go on like the Market Cipher Discord, and everyone's like, "Yeah, who else is shorting? Yeah, we're all shorting." I'm like, don't freak out. You've done your analysis, now stick to it, because you know that your analysis is good. If you have, entered near a support, then you know that your risk is very low. You know it's a good entry. Here's the thing. You can have a good entry even if the price goes totally against you. Like a good entry is pretty objective. Like if I enter a position right here, and I think price is going to come down here, and I'm entering, my stop loss is right above this resistance. I mean, that's just objectively a good entry because I'm risking very little to potentially gain a lot. So don't worry too much about it. If you know you have a good entry, then just go for it. Just go for it. And number 9, I already talked about this a little bit, but lock in your profits. Lock in your profits. Once profit is locked in, you'll have a much nicer time riding the trade out to the end. And it's okay to take profits to ensure a break even or a small loss. The gains will be smaller, but you'll have more fun. And the big trades will keep you going. So, like for example, in this trade here, this is like a little scalp trade. I have no idea how high the price is going to go because honestly, to me, I think that this is a bear flag. I think this is a bear flag. I could be wrong, but that's just what I think. Because of the 8 hour, because of those higher time frames, it would not surprise me if this was a bear flag and then we break below here. Of course, I have a bearish sentiment of the market right now. I'm really hoping that we test those lower levels so I can enter a really nice swing trade. That may or may not happen. It all depends on what Market Cipher is doing. But right now, the 8 hour is looking pretty bearish. The 4 hour is bearish. And really, to me, the 2 hours to make it or break it. What happens here, if this wave can actually confirm and give us that continued upward direction, then I think this trade has more upward potential. But if we just keep coming down like this, then yeah, I think this trade will be over. But because I've already locked in profits up at this level where we are currently trading at right now, I don't care. Like, I just don't care what happens. I know, okay, this is a winning trade for me regardless, and it's either going to be a small win or a big win. And so it takes the psychology out of it, where I can come on here and do a live stream and not worry. I don't even have my phone turned on right now, so I can't even go into Bybit if I wanted to and manage this trade. Like, it's going to be what it's going to be. And so I think, I already mentioned that, but locking in profits, that's a good way to do it. So these are just some things to keep in mind while you are trading. And at the end of the day, the purpose is to execute your trades as mechanically as possible, to remove as much emotion as possible. You should not care if the price goes up or down. All you should be focusing on is doing your technical analysis and finding good entries, low risk, high reward entries. Focus on your risk management, focus on back testing your strategies. And if you can remove the FOMO emotion, if you can remove from both ways, right? FOMOing into a trade and FOMOing out of a trade, then you will find that the gains will just come naturally. They will just come naturally. There's nothing more detrimental to trading than emotions gone wild. I mean, desperation, that's a big one. If you're desperate to make money, you are going to find that you will lose money. Because the pressure that you feel to make money doing this is going to cause you to enter trades based purely on emotion and not on your technical analysis. Greed is another emotion that can get in the way of your trading, right? If you're in a trade and you see the price keeps going up really high, and let's say you're in a leveraged trade, maybe you're over leveraging, I don't know, and you're up like a couple $1,000 in the trade. I mean, these trades can move fast when you're leveraged. They can move really fast. And so, if that's the case, and you're up, $2,000, and then all of a sudden you're down to like $900, instead of just taking some profit and letting the rest run, you might be tempted to just stay in that trade until it gets back up to $2,000 or whatever percent it is, however much capital you're putting on that trade. And if you do that, then you're going based on your emotions of wanting to get that money instead of being responsible and sticking to a risk management strategy and locking in your profits and stuff like that. So, try and remove as much emotion as possible. It's not going to be 100% possible because we are human, and we have emotions. We have emotions, and when money is on the line, those emotions can be very intense, very intense. So the focus should always be on learning the skill of trading, learning the skill of technical analysis, finding good entries, and only entering those trades that you are very confident in, that have high probability, that you see there's a lot of confluence. Of course, the higher term time frame the trade is, the more confluence I like to see. Like if I'm entering a shorter term trade, I'm more fluid with finding my confirmations, right? I don't look for a rigid set of confirmations, as opposed to if I'm looking to enter a swing trade, well then yes, I need to see market cipher B do this on the daily, I need to see that it do this on the 4 hour, I need to see it on a daily resistance level or something like that, or some kind of support or resistance that is breaking or bouncing off of. But if I'm on a lower time frame, it's more fluid, but we should always be focusing on the actual skill, the technical skill of trading, and not so much on the making money part. So that's pretty much it. This trading psychology is something that I think can really only be gained through experience. Learning not to FOMO can only happen through FOMOing, unfortunately. that's just at least in my experience. That's the case because I took courses on trading and they talk about, how you should never FOMO into something. And what do you know? I go out there and what do? I FOMO, and we've all done it, right? The only way we can stop doing that is when we FOMO and we lose because of it, and then we realize, okay, this is not beneficial to our trading, so we need to stop ASAP. So I'm going to come into the Discord here and see if we have any questions. Shout out to Crypto Clint, man. I'm glad you're here, bro. I'm glad you're here. Yeah, let's see if there's any questions. This is less of an actual trading session and more just like a motivational speech, right? That's basically what this is. Because it can be tough to get these things down, and it's really not something that can be learned through reading a book or anything other than experience. And so, just so you know, guys, yeah, it's simple in theory, but it's hard to practice. It's absolutely true. Yeah, TK42 Dan, that's a good idea. So yeah, so as you guys know, we are let me see here. I was supposed to have I was supposed to have 18 sessions here. We're on session 14, and this is we're basically done, right? So, we have quite a few more sessions, right? We have the end of this week and next week. And so what I want to do is I definitely want to do one on trading altcoins because I think that's important if we're going to be trading cryptocurrency. It's kind of different. The way I trade altcoins is different than the way I trade Bitcoin and Ethereum because really my entire mindset changes when I'm doing TA for altcoins in these bull markets. I want to touch on that. And I know that people had given suggestions last week about what we should do. Oh, yeah, exiting the bull market. I should talk about that. The transition into the bear market. We should talk about that as well. And then I guess TK42 Dan, I could go through my morning TA routine and just kind of show you what I'm looking for. That's great. And honestly, I don't know if you guys saw the Patreon exclusive video that I posted in this Discord on Sunday, but that's basically my morning routine, just more zoomed out because if I'm looking from day to day, I would look on lower time frames and see where good entries would be, but that's basically it. I'm just going to the chart and saying, okay, where would I become interested in a trade? But yeah, sure, I can go through that too. Do you guys have... Moondream says, paralysis of analysis, the story of my life lately. I'm currently working long hours trying to learn solid TA. At what point do you develop real confidence in your potential trades? That's a great question, Moondream. Honestly, to be totally honest, I don't think you just get to the point where you're okay with the fact that it could be a loss. And you just are like, well, this is what I see in the chart, and I know I have a good entry, and so I'm just going to go for it. And you're going to find that a lot of times you'll do pretty well. And then you start to gain confidence, and then you'll get overconfident, and you'll do something stupid like the short I entered last night, and then that humbles you, and then It's a constant growing process. It's a constant growing process. That's why you need to do your TA and stick to it. So Pete Kangaroo says, could you show us where is the RSI EMA indicator on TradingView and how you set it up? Sure. So this indicator on TradingView, the RSI EMA indicator, this is the way you find that is you just go to indicators and do KROWN, and it's the second one here, Crown Trading RSI EMA Control Zones. And all this does really, you don't need to, I don't set it up at all. It's just an EMA, this gray EMA, and this blue RSI. And when the RSI crosses over the EMA, things are bullish. And when it's under the EMA, things are bearish, technically. And so, we come to the 1 hour time frame here, the half-hour time frame. Obviously, the more you zoom in, the more zoomed in this indicator will be as well. We can see here that we're actually losing momentum. The current trade that I'm in right now seems to be losing momentum, right? But this is a great tool for finding bottoms along with Market Cipher. Because if we zoom out here, we can see that, as soon as Market Cipher is telling us when we get to the bottom right here, but this indicator is telling us when we're officially coming out of the bottom, right? When we cross above this line, this is when it's telling us we're coming out of the bottom. So Market Cipher told us the bottom is up here in this area, but we still had a little more downward movement to go. So this thing is telling us when we're coming up out of the bottom, okay? And so right here, in this area too, when it starts to cross over, it's telling us we're coming out of the bottom. Even though Market Cipher printed the bottom, down here, this thing is giving you an added layer of confluence along with Market Cipher. And then it also has the zero line, which gives you more assurance. So basically, check out what happens every time we cross the zero line. Not every time, but most times when we get a cross over the zero line, we're also getting a pump. Like right here, we cross the zero line, we get a pump. Right here, we cross the zero line, we get this massive pump. Right here, we cross the zero line, and what do we get? We get a dump. So it doesn't happen all the time. But it's just an added layer of confluence, and I'd like to use this instead of the Wolfpack ID now as my secondary confirmation tool, because I find that the Wolfpack ID only has the one line, which gives you direction, and it will confirm bullish or bearish. But this has three layers to it. It has the crossover of the RSI and the EMA, but then it also has the crossover of the zero line. And so if this entire structure is pointing up like it's starting to right now, then we know, okay, we have that upward momentum. And Wolfpack doesn't give us that because it only has the two lines. This has the three lines. And we can see the overall momentum in relation to the zero line as well as the cross of the EMA and the RSI. Premier Crypto, what are your thoughts on DCA? I've heard CryptoFace, he does it best when he trades in chunks, never entering or exiting at once. Setting take profits covers this on exiting, but what about entering? Yes. Yeah, so you can absolutely DCA into a trade, and I discussed this a little bit in my managing open positions trade, where pretty much I do that in the swing trades. But let's say, for example, that you already know that you want to enter a trade when we come to this area and you start to see Market Cipher is printing a bottom and you don't know when that bottom is going to print. There is nothing wrong with taking your position that you're going to enter. Let's say you're going to enter 1,000 contracts and you might put 300 in right here. And then we keep going lower, you put 300 in right here. And then you keep going lower, we put 300 in right here. There's absolutely nothing wrong with doing that. In fact, that is a good way to do it, but you need to make sure if you're DCAing into a position that you know that the position is going to go in your favor. Because what happens, especially when people are newer, like let's say, for example, you thought we were going to get a bounce off of this line and continue upward, right? So as soon as we come into this area, you're going to start dollar cost averaging into your trade as we're starting to come down and test this daily level, right? This this daily support level. So you might enter a little bit of your position here, you might enter a little here, you might enter a little bit here, and then what do you know, the price dumps, right? And so you have to be careful with that, and you have to really know that the price is not going to go down. That's why I don't like to dollar cost average into a new trade. I like to dollar cost average into an open trade and dollar cost average after I've already taken profit out of the trade. So in the swing trade, in the managing open trade session, man, this chart is sloppy. Let me come to a cleaner chart. Sorry, guys. See. No, this is sloppy too. Oh, and I apologize, guys, because I technically am supposed to be using I'm technically supposed to be using green and red candles for this, right? So if I'm in a long swing trade, like on the 4-hour, what I will do is I will enter a position somewhere down here, and then I will take profits out and put it back into my position, and I will DCA on the way down when we hit these dips. When Market Cipher B is showing us that we're losing momentum, I will DCA down into these dips, and I will also at times add to my position, like money that I did not originally have in that trade. If I feel that the trend is strong and we are going to continue, I will actually add a significant amount to my position. That's what I prefer to do. I don't like to dollar cost average into what I think is the bottom, because it might not be the bottom, right? I just don't know that. So, like if I was dollar cost averaging in here, well, so that's just not my style, but it's absolutely acceptable. A lot of people do it. And if anybody doesn't know, the reason we dollar cost average is because if we are entering 100% of our position here at the bottom, but then we have to come down a little bit before we come back up, then we're entering at this price right here. But if we split our 1,000 contracts into threes, right, and we do 333 here, 333 here, 333 here, or we'll do 334 here or whatever, then what happens is our entry price is the average of these three entries together, and that gives us a lower entry price on average than if we had just entered here, and then we can get more gains on the way up. But for me, I just don't like to do that. And CryptoFace does it when he's already in a trade, and what he does is he'll like ride a pump, and then, well, he'll usually be like on a lower time frame, at least based on from what I've witnessed him do, which I do watch a lot of his live streams. So he'll like ride a pump like this, and then he'll see, okay, we're starting to fizzle out. He'll be like, I'll be back. I'm going to get some food. And he'll like set some buy orders here, and he'll like set some buy orders down here, and set some buy orders down here. That way, while he's out doing his thing, or even if he's on the stream, he's already taken out profit, and then he's putting that profit back into the trade to ride the pump up higher. And then he might do that, here as well, to keep riding it up. So I think he kind of does, and I obviously can't say for sure because I'm not him, but I'm pretty sure he does similar to what I do. With if he's already in an open position, he will take profits out and then dollar cost average that profit back into the trade. Afix. Yeah. How much do you worry about or consider potential news? That's a great question. So, I take news very lightly, but I still consider it. I don't look at news. Some people only trade the news, but I like to look at the chart. So, there's been examples where Bitcoin pumps like crazy, and then it turns out that, there was news, and people say the news caused the pump. There's always news coming out, and it's always bullish and bearish. And sometimes, like, there was a PayPal thing that happened recently, and it didn't really affect the price of Bitcoin at all. And a lot of times I noticed that, and this is just me, maybe, I noticed that, like, news events happen when Market Cipher kind of tells us things would happen anyway. Like, a great example of this is like the Elon Musk pump, right? Well, Elon Musk pump happened right when we were getting this awesome upward momentum on market cipher B. I mean, we had this super clear from this anchor wave to this trigger wave right here where Elon Musk tweeted. We could draw a perfectly straight line between these momentums here. And then he tweets and everyone says, oh, Bitcoin pumps because Elon Musk tweeted. Maybe. Or this was when Tesla was, I forget what happened. But would this have happened anyway? Maybe not to the same extent. But sometimes I wonder if people just find news stories to latch onto to justify why Bitcoin moved. I don't know. But personally, when it comes to Bitcoin, I almost feel like the news might play a small role in the price action. But altcoins, man, those things, I trade the news. I trade the news with altcoins because in the bull market, like anybody could say anything about any altcoin that's slightly good and that thing will pump. I guess that probably doesn't really answer the question, but that's how I feel about it. When CryptoFace goes live, I mean, he only has 100,000 subscribers, so I don't know if 100,000 people can move the market. Perhaps it can. I don't know. I have to be honest with you. I don't know. I really just do my TA on the chart and trade that. And I have to be honest, if the news does affect it, it usually lines up with the TA anyway. Like this right here, I mean, this Elon Musk pump, I mean, really, look at what happened here. Okay? We had a resistance that we couldn't break above, right? We broke above it a little bit here, but then it was resistance here, it was resistance here, it was resistance here. We came up above it, we retested it. During the retest, we had this perfect straight line on market cipher, and then we get a bounce off the support. Before Elon Musk even tweets, we get a bounce off this support, and then, boom, he tweets and we go way up. And CryptoFace was actually trading this. I remember, and in fact, I mean, I was trading this too. He was live. I remember when this happened because I actually entered a long position and went to sleep that night because of what I saw happening on Market Cipher, and I was not expecting to wake up in as much profit as I did, but I remember CryptoFace thanked Elon for all his profit, but CryptoFace entered this trade anyway because he saw what the market was doing, and so it's just interesting that maybe Elon Musk has market cipher, but there's so many things that would make you enter a long position here, and then it just so happens that he tweets that and we get that pump. It's just strange. It's strange, to say the least. Monique wants to know my view on XRP. Yeah, that's true. CryptoFace's whale crew could get the pump, right? Yeah. Well, Aphex, when CryptoFace entered when he started live streaming last night, did you see his entry price? He was in that trade for a long time. He only started going live after that pump already happened, but he had been in that trade for a long time. He was already up like 200 grand, and his entry was way down low. So he just I guess he started live streaming after the pump happened, but he had been in that trade all day. All right, XRP. I have a very negative view of XRP, and I guess it was because of all the lawsuit stuff that was happening back in the fall, and or was that the winter? I don't know. And so I haven't really been paying attention to it, but I know it's pumping, and I know people are making a lot of money on it right now. I know it's pumping, and I know people are making quite a lot of money on XRP right now. And I'm sorry that I haven't been paying attention to it. I really have not. But look at this, man. This is pretty intense. I would say that right now it looks like we're going to be cooling off for a little bit. but this money flow is thick on the 4-hour. And if we go just looking at this kind of direction where we hit this bottom money flow in the red, and then we see this very, very clear upward direction, obviously it's very bullish. So I have not been trading XRP since November, as you can see back here, when I was doing some TA on XRP. Yeah, that's the last time I traded XRP. And then this whole weird thing happened where, the lawsuit potential happened. The last time I traded XRP, I rode this pump on Bybit, and then I sold at the top when we started to come down. And then I shorted this, and then that's it. I have not touched XRP since. So, I'm sorry. But wow. Wow, it's looking like, we're getting pretty overbought here. I'm sorry, Monique. I can't really give much of a XRP. I haven't been reading the news about it. I don't know. Is there news about that? I have not been paying attention to XRP. I've kind of like blacklisted it. I never really liked it anyway because it's like the crypto that's friends with the banks, And so when it started to pump back in the fall there, I started to pay attention. But okay, I figure when crypto face goes up, yeah, okay. Are there any more questions or? So then in the upcoming session, I'm going to be talking about transitioning into the bear market, exiting the bull market, and I will be going through. Oh, it is the first day of the hearing, so no one really. Okay, interesting, Afix. That's interesting. Yeah, I put XRP on my blacklist. I was never a big fan of it because of the reason they're like friends with the banks. Thank you, Moondream. Appreciate it. So yeah, guys, what else? What other topics do you want me to cover, or if there's anything you want me to expound upon in these upcoming sessions? Let me know. Right now, talking about transitioning into the bear market / exiting the bull market. Also going through my morning TA routine where I plan out how I'm looking to trade that day, and then also talking about trading altcoins, because honestly, guys, I make more money trading altcoins than I do trading Bitcoin, and there's just the gains are insane. They're insane. I just had a guy today tell me he 4x'd his trading account, trading the altcoins that I post in that altcoin channel, because the gains have been crazy. The gains have been crazy. Yeah, we'll talk about it, Moondream. Premier Crypto, any suggestions on percentage of portfolio to trade Bitcoin, trade ETH, HODL altcoins, trade altcoins, etc.? I never know if I'm balanced. I would like to buy / trade more altcoins, but don't want to leave my main Bitcoin trading account underfunded. Yeah, well, that's the great dilemma of being a trader, right? Premier Crypto, that struggle is always there. Basically, I've gotten to a point where I like to have a certain amount of Bitcoin to trade and Ethereum to trade. And then really what I do is I have a whole bunch of USDT. I put that in Binance, and I use that to trade altcoins. And really the focus for me with the altcoins is those big pumps. So, I've been accumulating cryptocurrency for a very long time. So I have a lot to mess around with. But if depending on how much you have to mess around with, if you put, $1,000 into a certain altcoin, and it goes up, 30% in a few days, 50% in a few days, what did the dent went up 100% almost. So if you put $1,000 in there, you just made $1,000 in a week. And again, it's all about percentages, right? So you should want to divvy up these things into percentages. And if you have your entire portfolio, I would say, for me, I always keep at least 25% of my Bitcoin in a tracer. I don't ever touch it. And the rest I like actively invest. And I will turn it from Bitcoin into USDT, and then buy back into Bitcoin. And I will trade altcoins and sell the altcoins for Bitcoin. It's like a crazy thing that I do. But figuring out exact percentages, I don't think there's ever going to be a real answer to that. I don't think there's ever going to be a real answer. And it will also change depending on the market conditions. Because if we're in a bear market, I'll tell you, I will be trading primarily Bitcoin and Ethereum on those sideways markets. Because obviously during a sideways crypto winter, those altcoins are not going to be pumping, right? Except for the rare altcoin pump, which inevitably we're all going to miss. So, it depends on the market conditions. But in this bull market, I have quite a lot that I'm doing on Binance. Quite a lot. Do I ever consider the Machiavellian aspect of placing a trade and the effect it may have on other traders in the market and their thinking at the same time? Yeah, perhaps that might be true, Afix, especially if everyone's on the same exchange. If you go into like the Market Cipher Discord or whatever, and there happens to be some people in there with a really huge trading account, then absolutely that could be a thing, man. If everyone's going long. And yeah, I don't know, man. There's a lot of things I just don't know. Like Fibonacci levels. Is it just all because people trade those levels, or is there really something special about those numbers? I don't know. Yeah, TK42 Dan, Binance, that's where people leverage trade altcoins. And yeah, you can leverage trade altcoins too on Binance. So I mean, if you're pretty convinced that a coin is going to pump and you want to take a risk and you say, I have $1,000, I don't care if I lose it, but there's a chance here that I could, make 100% 10x leverage. Make 1,000% on your $1,000, then hey, go for it. Seriously, I mean, if you have play money and you're just looking at Binance at some of these altcoins that could like break out at any time, and you say, well, if I lose $1,000, I'd lose $1,000, but I could make 1,000% on this, so why not go for it? Ed Dantes, I would like to know if I have a primary list of 10 confluences I'd like to see, 5 or more, before I make a trade, or even a hierarchy of confluences you give more weight to besides support, resistance, trend lines, and higher time frames. That's a good question, Ed. Well, let me just say that the support and resistance levels on the higher time frames are the first thing that I look at. They are always the first thing that I look at. And then after that, the second thing I look at is Market Cipher. And really, that's, to be totally honest with you, that's kind of it. And support and resistance lines, they include Fibonacci levels. So those are super important. And then I just look for other reassurances, like Market Cipher A, for example, or the RSI, or the Crown RSI EMA indicator. My trading is very basic. Like, my trading is extremely basic. And to be honest with you, I'm comfortable with that. Like, people are, they're drawing harmonics and Elliott waves, and I know those things work. But whenever I look at people doing that, because I'm still taking trading courses, and I'm still learning. I'm still educating myself on this. And the more I look at people doing these very intense charts, I've realized that their conclusions are pretty much the same as mine. Maybe they're a little bit more precise, but in general, those daily support and resistance levels are extremely well respected. And even like the support and resistance, I mean, and Fibonacci levels. I mean, you could draw an Elliott wave and end up back at support, when you're coming down on the ABC of the down part of the wave. And I don't know. That's my take on it. I like to keep it more simple. I'm not knocking anybody who does those things. I know a lot of traders who do that with a lot of success. The Elliott wave counts. I don't do that. And for me, if I have a specific strategy where it's an algorithmic strategy, like the 50-minute, 5-minute time frame, or the VWAP crossover strategy, then I have my list of confirmations for that specific strategy. And if it's not that and it's more of a free flow kind of thing, then I'm really just looking at support and resistance and then market cipher. That's really it. Yeah, Premier heard that the fib levels are so relevant because bots are set to trade on them. Yeah, that could be true too. But, these levels were respected before bots were even like a thing, before trading bots were even a thing. Because technical analysis is an old practice that goes back, people were trading Forex in the 90s using Fibonacci extension levels, and they didn't have trading bots back then. So, I don't know, man. I don't know. Sure thing, Ed. Yeah, thanks, Afix. Peace out, TK42 Dan. Yeah, blessings to you from my neck of the woods as well. And if anybody has any more questions, let me know. And if not, we'll cut the stream and I'll see all you guys on Thursday. Thank you, guys. Yeah, I should come hang out in the voice chat sometime. Yeah, let's do it. All right. Thank you, Springboard. Thank you for being here. Appreciate all you guys. God bless.